Hello, in this presentation we will record the transaction related to the purchase of equipment with debt into our bookkeeping problem in Excel, keeping in mind how the same information might be put into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. First, we will take a quick look at QuickBooks and then jump back to Excel to enter this information. If we enter this into QuickBooks, there's a couple things that are a bit different about the purchase of equipment with debt. One, purchasing of equipment is usually a large thing. We're purchasing something that has a fairly decent dollar amount, and therefore it doesn't happen all the time. So it's not something we see as readily on the home page. We may not just be running through the normal purchasing process in the home page. And therefore, we have to go somewhere else, and that's a little bit more unusual than just the day-to-day transactions, which happen all the time, and therefore, there's a set process for them that we see readily. The other thing that's going to be different here is that we're dealing with debt, meaning we're purchasing it and we're financing it, and therefore, if there's no cash affected, we're not just going through the check register, or as we could do if there were cash affected. And so it's a little bit more complex most of the time for us to enter this information into a QuickBooks system. One way we could do it is with a journal entry, which is in essence what we will do in Excel. But QuickBooks, oftentimes they try to build things in so that we can put data in without knowing journal entries. And most of that is done, as we've seen, with forms, so that invoice and the bills and whatnot are attempts for us to be able to simplify the process so that once set up, we can just enter that stuff into the forms, and then it'll flow through to the financial statements. No set form particularly for a purchase of equipment because it's more of an unusual transaction. So we could go to a register and instead of choosing the check register because we're not paying cash, we can pick, say, the furniture and equipment register. And it would be much like a journal entry if we were to do that. This would be the furniture and equipment register. And it looks kind of like a check register, except for the fact that when we see these increases and decreases, it means increase and decrease to this furniture and fixture account. And therefore, we're going to say that we're purchasing something from Office Depot. There's an increase, not to cash, but to this particular account. And then the other side is going to go to loans payable. And by doing that, QuickBooks can basically figure out the debits and credits by this increase and decrease type format. This works for types of transactions that have maybe two transactions. It gets a bit more difficult to not be using debits and credits when we get to transactions that have 3 or more items, but it's still possible to do it. I'm not sure exactly if it's a lot easier to do that than to do a journal entry, but since we're working this and showing the QuickBooks side, we'll show how to do it, working around doing the journal entries, meaning working around knowing debits and credits. And then we'll see the debits and credits when we go to Excel. Let's do that now. We are now in Excel and we're going to record this transaction. So we're going to be purchasing equipment with debt. So if you were to see this in like a book problem, it would be like purchasing equipment on account or purchasing equipment taking out a loan. And the first question then, of course, is always, is cash affected? And we're going to say, in this case, no, because we're purchasing it on account, meaning we're buying some type of equipment like a forklift or something, and we are financing the entire thing. So if that's the case, typically I like to think about what we got. What did we get? What did we receive? Because sometimes it's easier to know the debits and credits if we do that first. We got furniture and fixture. So we got this item here, furniture and fixture, still an asset, has a debit balance. We're going to make it go up by doing the same thing to it, which in this case would be another debit. So I'm going to copy the furniture and fixture. We'll put that on top of our journal entry. Scrolling back down to the next available location, it's still 228. A lot of activity on the last day here. We're going to say right click and paste 123. The amount is going to be for 5,000. We're going to credit something as well for 5,000. And the credit will not be to cash because we didn't pay cash. It's not going to go to accounts payable because it's going to be more of a long-term debt, meaning we're probably going to be financing it, probably have to pay interest on it and have a formal written contract for it. And therefore, it will be going to loans payable. We're first going to start off with all loans payable in the long-term loans payable or one loans payable account. Later, we will be breaking this out to a short-term and a long-term portion, a current and a long-term portion as part of our adjusting process. So I'm going to go ahead and copy this loan payable. And that will be then the credit. That's going to be in Q33, right-clicking and pasting 1, 2, 3. We'll then format this by selecting this item and go into the Home tab. We're going to go to the Alignment group and increase the indentation. We have now journalized the journal entry, and we will go through the process of posting the journal entry to the general ledger. Before we do that, we're going to freeze the panes if they're not frozen already. So I'm going to scroll up to the cell of AJ1, and then we'll go to the View tab up top. We're going to go to the Windows group within the View tab. Select the Freeze Panes, and we will freeze the panes, lessens the pain of posting. Scrolling back down, we're going to post this last transaction that we have, starting with the furniture and the fixtures. Furniture and fixtures. That then is here, the last green account on the trial balance, last asset account that is, and therefore will also be the last green account or asset account on the general ledger. I should say green account and asset account. We're going to scroll over and find it. Scrolling over to find the last green account and asset account of furniture and fixture, found it in AY8. So we are in cell AY8. We're going to scroll back down and we need to pick up that 5,000. So what we're going to do is we will be saying equals, then we're going to scroll down just a bit and click on that 5,000. Let's do that now. Scrolling back up, we are clicking on AY8, we're selecting equals, we're scrolling down just a bit and picking up that 5,000 and enter. So that has increased the balance from 98,000 to 103,000. Let's see if that's the amount on the financial statement, as we hope it will be. We see the amount 103,000. Scrolling back down, we are out of balance by the 5,000, and notice that there's no effect on net income here. Why? Because we're capitalizing the equipment, meaning we're not just going to expense it, and even if we paid cash, we wouldn't just be expensing it at the time of purchase, because it's a long-term asset that we will be using over a long period of time, and therefore will be depreciating over that period of time. Next, we have the loan payable. So loan payable is the next account we will be posting to. That's down here. It's the last orange account. We had the last green account. Now we're doing the last orange accounts. So we're going to find that. That's the last liability account. Scrolling back over, it's going to be in the same order on the general ledger. Here are the green accounts, the assets. Here are the orange accounts, the liabilities. It's going to be down here somewhere. It's going to be down here possibly. Unearned revenue, no, I was wrong. It's going to be at the top of the next column. There it is. So we want a credit. So we are over here in BH10. BH10. And we're going to scroll. Maybe I should go over a little bit more and put it side by side here. Let's put this side by side. We're still in BH10, but we're side by side now. Now I'm going to scroll down, and we need to pick up that 5,000. So what is going to happen is we're going to be in BH10. We're going to select equals. We're going to scroll down just a bit and select that credit of 5,000. Let's do that now. We are now in cell BH10. We're selecting equals. We're scrolling down just a bit, selecting that 5,000 and enter. So there we have it. The balance goes up from 69,879 by 5,000 to 74,878. Let's see if that 74,878 is the amount on the trial balance, as I believe it will be, and hope that it is. Scrolling down, we see that 74,878. There it is. That puts us back in balance. No effect on net income from this transaction, not because we didn't pay cash, but because we bought furniture and equipment, which has not been consumed yet, and we will be expensing it as it is consumed in the format of depreciation. We'll see that in the adjusting process at the end of the month. For now, let's first unfreeze the panes and then go look at the financial statements and see if this has populated automatically as it would in accounting software. We're going to the View tab, the Windows group, the Freeze Panes within the Windows group, and we will unfreeze the panes because we no longer need to post. Scrolling down, we're going to see what we did something to the last asset account, I recall, was the furniture and fixture. I'm going to point that over to the financial statements. And we did something to the last liability account, the last orange account. So we're going to point that to the financial statements. And then we're going to take a scroll to the financial statements all the way to the right. So we're just scrolling over the right and see what happened to them. Hopefully they've been updated automatically. There's the furniture and equipment, and there's the loan payable, and we are still in balance. Assets still equal total liabilities and equity. That is no effect on the income statement. Still seeing that net income of $8,161. That same amount on the statement of equity as well. Part of the calculation for the ending equity of $152,336. That found as well on the balance sheet.